All right, let's bring in Doug Clinton, Intelligent Alpha founder and CEO, to discuss. I said before, to our markets panel, if nothing else, this just reminds you where the puck's going, where the flood of capital continues to go, whether it's in the private market or in the public markets by investors who want to capitalize on this incredible revolution in AI.
That's right. I mean, valuations are forward-looking, Scott. You see the $150 billion number. We talk about Uber as a comp. We talk about double Chipotle, which I think OpenAI probably should be double Chipotle. But that's what I think investors are betting on, is that today we've got a company with a $4 billion annualized run rate. Next year, I've heard rumors that they think they could hit 10. Trading 15 times that run rate. It feels expensive today if you do the math, but looking out tomorrow, if that's the future, then it won't look so bad.
Would you guys be lining up to get something on the IPO at this one?
Well, we did invest at Deepwater and XAI, so we are big believers in these foundation model companies. We didn't participate in this round. It doesn't mean that we wouldn't look to in the future.
Right. How are you thinking about tech right now? We said in this quarter, which just ended, it took a bit of a backseat to the rest of the market. Some say that's a great sign, but better late than never. But what about that? What about the sector here? We're going to be talking about earnings in a few weeks.
We still feel bullish about tech, and our view hasn't changed at all. I mean, we've been talking about a 2 to 4 year window here where we think AI will continue its bull run. I've used the word bubble in the past to describe what I think the ultimate outcome is. It's hard to see a scenario where if AI is as profound as we all think it is, that it doesn't end in bubble, because typically every breakthrough technology does. You need that excess capital to just make sure that all of the access is cheap. All of the bad ideas out there that might turn out to be good ones get tried, and that's what we're seeing now.
But that just means that some eggs in the carton get broken. It doesn't mean that the whole thing gets destroyed.
That's right.
Correct?
I think the carton gets dropped, and maybe even some of the good eggs maybe roll around on the floor for a little while. But you need to go as an investor who is paying attention to this, close attention, and say which are the ones that ultimately should have long-term value. And I think private market investors certainly are voting
for
the
names that you continue to bet on most of all are Meta and NVIDIA, is that right?
That's right.
Why have you sort of pushed the others to the side and focused more heavily on those?
We do have some exposure.
It's rather obvious, but if you want to say, let's say Meta over Alphabet over some of the others.
Sure, we also do own some Alphabet. So the way we think of it is kind of NVIDIA, Meta, Alphabet as the big three within mega cap tech. They control their own destiny in AI. Meta and Google are building their own models. They can self-fund building their own models. They don't need to go raise $6 billion. They can make that in a month. And so those companies, I think, are just in a unique position as we think about this future of AI. They kind of control where they can go. NVIDIA, of course, is the ARM supplier, and so that's the bet there.
So PDD and Tencent, you're in, or it's our top holdings in the ETF. How are you thinking about these stocks, which have just ripped over the last week? Too much? Time to get off the boat? What do you think?
Well, so what's really interesting about this new ETF we launched that holds these Chinese equities is it's actually powered by AI. We have built Intelligent Alpha. We've launched it as a new firm out of Deepwater, where our first product is the Livermore ETF. The ticker is LIVR. And we use an AI-powered investment committee, which consists of GPT, Claude, and Gemini, 3 large language models, to go and pick these stocks. And so one of the themes when we launched that the AI committee loved was China. And I mean, timing is lucky, right? We couldn't have predicted that a week later the Chinese bank would be cutting rates as aggressively as they did. But AI kind of saw that, I think as we were talking about in the prior panel, China just felt like it was in the tank. It was probably as cheap as it could get. AI made that bet, and it's paying off right now.